Domestic cooking gas consumers across India are also set to face another financial burden as state-owned oil marketing companies have increased the price of domestic LPG cylinders by Rs 29 with effect from June 7, 2026, that is today. The latest revision comes amid rising global energy prices, supply chain disruptions and continuing geopolitical tensions linked to the ongoing US-Iran conflict, which has kept international fuel markets volatile for the past several months. Following the latest hike, the price of a standard 14.2 kilogram domestic LPG cylinder in Delhi has increased from Rs 913 to Rs 942. In Mumbai, consumers will now pay Rs 941.50 instead of Rs 912.50. While in Kolkata, the revised price has gone up from Rs 939 to Rs 968. In Chennai, the price of the domestic LPG cylinder has increased from Rs 928.50 to Rs 957.50. The new rates came into effect from midnight on Sunday, and this is the second increase in domestic LPG prices in just 3 months. Earlier on March 7, oil companies had raised the price of LPG cylinders by Rs 60 after global crude oil prices surged due to the disruptions in energy supplies from West Asia. And with the latest revision, the cumulative increase in domestic LPG prices has now reached Rs 89 within a span of 3 months, adding to the pressure on household budgets already affected by inflation and rising fuel cost. According to the report, state-run oil marketing companies were suffering losses of nearly Rs 703 on every domestic LPG cylinder that is sold before the latest increase. And officials say that the fresh hike will only partially offset these losses, as the gap between domestic selling prices and international procurement costs remains significant. Rising crude oil prices, expensive imports and the weakening global supply chain have reportedly forced fuel retailers in order to revise prices despite concerns over inflation and public sentiment. The increase in LPG prices comes at a time when fuel prices across multiple categories have also witnessed sharp hikes. And since mid-May, petrol and diesel prices have reportedly risen cumulatively by Rs 7.50 per litre, while compressed natural gas, or also known as CNG, has become costlier by around Rs 6 per kilogram. Industry sources claim that despite all these increases, oil companies are still selling petrol and diesel below their actual cost price, resulting in estimated losses of around Rs 11 per litre on petrol and nearly Rs 33.6 per litre on diesel. The central government, however, has maintained that consumers are not bearing the full burden of rising global energy prices. Officials argue that state-owned fuel retailers are absorbing a substantial portion of the increased cost in order to prevent a sharper spike in fuel prices in the domestic market. The government has repeatedly stated that ensuring fuel availability and maintaining supply stability remain top priorities amid the continuing global energy crisis. And earlier this week, the Ministry of Petroleum and the Natural Gas assured that all the necessary measures are being taken in order to maintain adequate LPG availability across the country. Sujata Sharma, Joint Secretary in the ministry, said that the under-recovery on domestic LPG cylinders still remains close to Rs 700 per cylinder, despite recent price revisions. She also noted that certain operational improvements, including better booking management systems and delivery authentication code-linked deliveries, have slightly helped reduce the burden on oil companies. And apart from the standard 14.2 kilogram cylinder, the price of the smaller 5 kilogram LPG cylinder has also been increased by Rs 11, taking its revised price to Rs 821.50. Earlier this year, before the latest domestic hike, commercial LPG cylinder prices had also been revised upward by Rs 31 on March 1, further indicating sustained pressure in the fuel sector. Experts believe consumers are unlikely to receive immediate relief in the coming weeks as global crude oil markets continue to remain unstable due to the geopolitical tensions in the Middle East. And the price of LPG in India is determined by several factors, including international fuel prices, the rupees exchange rate against the US dollar, transportation and bottling cost, distribution expenses, and government taxes and subsidy policies. And with inflationary pressures already affecting household spending, the repeated increase in LPG prices is expected to further impact middle-class and lower-income families who depend heavily on subsidized cooking gas for the daily use. And as the global energy uncertainties continue, both the consumers and fuel retailers remain closely watchful of future price movements and government intervention measures. That's all for now. Stay tuned to the Savera for more updates. Do like, comment and subscribe to the channel.